Are you in this crazy market right now as either a buyer or a seller and you're wondering, how do I make my offer stand out? Or what do I do with all these offers? How do I know which one is the best? Stick around, we're gonna break it down for you.
What is going on? It is Andrew and
AJ.
with the Emerald Group right here in beautiful sunny Fort Walton Beach, Florida. And today we've got a lot of great content for you, particularly for you guys that are going to be buying or selling here in the market here soon.
Yes, we do.
So if you're looking to figure out everything there is to know about living here on the beautiful Emerald Coast, which is Pensacola to Panama City Beach and everything in between, we've come to the right channel. Make sure you hit that subscribe button and then
Hit that little bell as well so that you get notified every time we do a new video. Now listen, we have been getting hit up via texts and phone calls and Facebook messages and emails, and we love it, right?
yeah.
I would say my favorite is via Facebook message, to be completely honest.
I like the comments down below, personally.
Ooh, I do like the comments.
I do like chatting with you guys there. But the point is, we have people reaching out to us every single day. All of our information is on the screen. If you are thinking about purchasing in this area, or you need any other help in basically anything that we chat about, then go ahead and reach out to us day or night, although we'll probably only respond back during the day. Just know that going into it.
Yeah, that's probably the case. And so give us a little bit of time, especially if you're in a different time zone from us. Keep that in mind as well. We might reach back out to you not realizing that it's a different time for you. So if it's kind of inconvenient when we respond, know that we just didn't know. So if you're in a different time zone and you're like, hey, don't contact me between these hours because I have a sleeping toddler and I'm going to get really mad, just let us know so that we don't do that. I know that pain.
Okay, so you're entering into the marketplace, or maybe you're about to throw your house on the market and you're wondering what you can either do to make your offer stand out, or if you're going to be on the selling side, what you need to be looking out for to make sure that you're maximizing the most out of your deal because, well, it's a great seller's market right now, so of course you'd want to do that. And as buyers, you want to make sure that you're not offering on 50 different homes just to get the right one. You want to do this one time. When you fall in love, you want to secure it. So today's tips are going to be all about that. Let's get into it.
We are going to be presenting all of this information to you from the seller's perspective. It's going to be super beneficial to the buyer as well because you're going to be kind of getting a behind the scenes mindset overview of the seller so that you'll be able to take that information and put it in place whenever you are considering drafting an offer for the house that you fall in love with. So the first thing I think that everyone will agree to that they're going to look at whenever they have multiple offers in hand is the price. Of course, which one has the biggest number at the top? I say at the top because our spreadsheets, whenever we show multiple offers to our sellers, has columns of information, and at the top, of course, we do the big number. What are you going to get? But that big number isn't necessarily what is going to net a seller the most amount of money. So then we have some different things that come into play. You want to talk about different forms of financing versus cash?
Yeah, so when it comes to the different types of financing that you might have in your property, of course, you've got cash, you've got conventional via FHA, and then there's a slew of other different options from portfolio loans to hard money to different types of conventional products. They're USDA. I mean, the list goes on and on. There's probably 24 of them that we can name off if we wanted to. But the point is we're going to go over the main distinct ones because those are going to be the biggest ones that come into play. So obviously with a cash offer, there are certain contingencies that are removed that is very beneficial to you as the seller, right? Because we're doing this from the seller standpoint. So that's going to alleviate a lender that maybe doesn't know what they're doing or can't close on time, doesn't get the appraisal on time. These are all things that are going to be affected when you're doing a cash offer versus financing. Financing is going to require that you have a survey done, that you have an appraisal done. It's going to need 30 days for the most part. Stick around for our bonus content because we are going to talk about some other options where you can kind of alleviate that. Actually, we're going to touch on it a little bit here in just a moment. Make sure you stick around for that because there are other options. But my point is, for the most part, the cash is generally going to be better for that because it's removing contingencies, namely the financing contingency.
Absolutely. I would like to say that even though with a cash offer, typically you don't have to have those contingencies, the offer could be accompanied with contingencies if they wanted to. So say you had a property on the market for $400,000 and you had a cash offer of $400,000. They might still put an appraisal contingency on there. They don't have to because they don't have a lender that requires it, but they might be like, well, I still want to know that it's worth $400,000. $400,000 if that's what I'm going to pay for it. So we do still have to continue looking down the entire offer to make sure that there isn't anything hidden in there that we wouldn't typically anticipate when there wasn't a financing contingency.
And we've got to keep this in mind too, that just because they're paying cash in this particular instance doesn't mean that they're not going to get those things. They might elect to do that. Even an appraisal, a lot of people are surprised that sometimes a cash offer will pay for an appraisal just so they can see where it's at. But namely the survey, that's one of the big ones that is actually ordered quite often, and it could still be a deal breaker if your neighbor has an encroachment over onto your property or something like that. So you're not out of the woods just because it's cash, but it does alleviate a little bit of it. So now talking about different financed offers, what else are we thinking?
Actually, I wanted to touch back on that really quick about the benefit of a cash offer, because you brought up a good point of while we're removing these contingencies, one of the things that it's also alleviating, even if it's not the contingencies, is wondering whether or not it can go through due to financing, because a lot of times buyers will have changes in jobs, or maybe they lose their job, or something could happen where financing situations change, and then while they were approved and able to purchase at the time they wrote the contract, halfway through they're no longer able to purchase, whereas that typically doesn't happen with a cash offer. So just another benefit there.
Yeah, and you actually bring up a really good point too. And to add on top of that, you've got any number of things could happen throughout this process, right? It may not necessarily be that they lose their job. It could be they bought furniture, they bought whatever. My point with this is having somebody overqualified whenever you're taking a loan offer is generally a slightly safer bet. Now, this might not make your decision making easier, because you might have somebody that is actually offered and it's going to net you a little bit less, but they might be a little bit safer because maybe it's that same $400,000 that AJ just mentioned of a property, and they're willing to go up to 410, but they're qualified up to 550. Well, then you have a generally good idea for the most part that if they went out and bought furniture or bought a new car, it's not going to change their debt to income ratio so drastically that they won't be able to purchase the property. So these are things that you want to take into effect.
Yeah, definitely. And that, actually we'll touch on that later when we talk about pre-approvals. But going back to the financing part of it, so with these different loans, a lot of times there will be some loans that are looked upon less favorably than others. Specifically a VA loan, I've seen a lot of folks get a little bit nervous because the VA loan, while the financing part isn't necessarily scary, the VA has some of their own requirements. So just about any buyer, I would recommend every buyer gets a home inspected. But that inspection is just for the buyer. That doesn't go anywhere. That doesn't go to the insurance company. That doesn't go to the lender. That specifically goes to the buyer to show them everything that an inspector can find out about a property. It's just good business to know what you're buying, right? Well, aside from that, a VA appraiser is going to look at things themselves as well to report back to the VA. They're going to be looking at different items themselves to say, okay, we're doing our own kind of like marginal inspection, if you will. I don't want to call it an inspection because it's not such a full-scale inspection that you typically order, but they can come back and say, well, we're not going to finance this because there are these issues that we found. And so the seller, you seller, are going to have to make those repairs for any VA buyer, or negotiate it so that the buyer pays for those repairs, and we can go down that rabbit hole another time. The point is those repairs will have to be made before the VA will finance a loan on that property.
This goes the same with FHA, USDA. I mean, really anything, including conventional, actually. You don't see it as often on a conventional loan, and then you've got a little bit of wiggle room because you're putting 1% down. So that's why you don't see it as much, but they have rules too. And so that's all they are. It's not really an inspection per se, but it is following certain guidelines to make sure that the investor on the back end is good, and that for this case, the VA or FHA says the house is good because they're trying to protect the buyer. So that's why a lot of people get a little bit cringy around VA and FHA in general. I don't think there's anything to worry about. Of course, it's 60 some odd % of our marketplace here, so we're pretty used to the VA loan. But I know in a lot of other areas, it's got kind of a bad rep just because of how the lack of experience is what I think it is.
I think so too, because I know the majority of deals that I've done have definitely been VA loans, and I've used my VA loan like 5 or 6 times at this point, and so I definitely don't have anything negative to say about it. I have just definitely heard from my sellers, oh well, that one's a VA loan though, like what about this conventional one? And that's kind of what we see. But going into it, something a little nuance about the different types of loans is the down payment that Mongo brought up. Something that kind of also lends itself to a little bit more of a warm and fuzzy is with the conventional loan, you typically have a bigger down payment and also typically a larger earnest money deposit. A lot of times with a VA loan, you're only going to see a $500 or $1,000 earnest money deposit, not even depending on the price of the property, unless the seller stipulates, I want a larger, like 1% down standard earnest money deposit. So that's a difference that we see as well. When you know that your buyer is coming to you already prepared to put money down, it just makes you feel a little bit more secure in the potential for them to definitely close.
Yeah, it shows that they've got cash on hand, all of that good stuff. So you can definitely alleviate a lot of this, right? So I don't necessarily want to rank all of these in order of importance, but I'm going to on some level, but it's like so minor that I wouldn't get hung up on this is what I'm trying to emphasize here. But definitely cash would be first. If all other things were equal, cash, conventional, and then FHA, VH, or FHA, VA, and then maybe USDA, some other ones. And then you've got portfolio loans somewhere in the middle. The point with this is you can alleviate all of it. So, as a seller, if that's what you want to do, you want a higher earnest money deposit to know that they've got more skin in the game, great, right? If you've got $5,000 on the line versus $1,000, you're a little bit less likely to back away, which is happening a little bit more frequently now than it was 2 years ago. People are having to pay high prices for these homes. They're paying at top of the market for whatever the market looks like at the time. They had to beat out 10 other people, and they expect the world to be laden at their feet at that point. And there's nothing wrong with that, right? Like we want a great house. We want to buy our home, right? But that's something to put into the equation, that there are a lot that are falling through, and it's because of just the way the market's going. Like that's just a nuance of the market. So try to alleviate that as much as possible. Now going on to the financing, different types of approval. You want to talk about that?
Yeah, so differences between pre-qualification and pre-approval. So this is specifically when you have financing, right? So we don't worry about this with cash. So a pre-qualification letter is super easy to get. I can call a lender on the phone and say, these are my assets, this is my debt to income, this is how much I make, these are my debts, I need a pre-qual letter. Okay, well, pre-approval means I've supplied those documents. And so there's proof of everything that I stated, and here's your pre-approval letter stating, as of right now, with all the documents that you've provided us, we believe that you will absolutely get this to closing, right? With everything that you've provided, as of right now, with everything that you've shown, you can afford this house, we will accept the risk to back it for you, you can get this to closing. That's the letter that you want, not the pre-qualification, you want the pre-approval.
And so those are the two different types of, kind of pre-qualifications that you can do. You can also do what's called conditional pre-approved before. There's probably 100 different names for this depending on your area, wherever you're going to be purchasing. But that's essentially where they ask for everything up front, they get all the documents from you, and they start sending this into underwriting. Now, they've got to feel very confident about your financing to do this because they're essentially doing all this work for free. And then what they do is they run everything through and get it conditionally approved, meaning all we got to do is do some pretty basic stuff. We need to get a survey, we need to get an appraiser out there, and both of those things need to be good. In this case, your offer is slightly stronger than what we would consider a pre-approval for. In fact, it would not surprise me if down the road, that's where this is going. It used to start off with a pre-qual, and then it eventually went to pre-approvals because they were stronger, and I have a feeling that that's where the market will eventually go. Conditionally pre-approved people will be the only ones. There are also companies out there right now where you can actually go through an entire process, and they will give you cash, and they will actually purchase the property for you as a cash offer. So don't fret if you do not have cash and you're worried about this. This is an option. Now everything comes at a price, so just keep that in mind. There might be more fees, the interest rate might be higher. I don't know what the specific rules are. We just had a lender here locally roll out a new product with it, so we're going to learn a little bit about that as we go. But my point with this is you can definitely get your offer to be looked at a little bit better. And a little bonus tip that I do want to point out here, you remember earlier when we were talking about cash, and I mentioned that you can still get a survey, you can still get inspections, you can get all that stuff. You can also get this, use financing on a cash offer. So if you have the funds or you have a retirement account that you would be willing to purchase a home, and you could technically place something under contract and go through, get a loan, and as long as that loan doesn't delay anything or cost the seller any extra money or hassle, then you're perfectly fine to use it. But if the lender can't close on time, you would be required to close with cash, so you do have to have that ready. But it could, for a small select amount of people, that could actually be a pretty good option.
Yeah, I would like to add to that just because it's a little bit riskier, especially because typically on a cash offer we see shorter timelines, so faster closing dates. So if you're going to do a cash offer and you're going to have a longer closing date, that might be an option for you. But know that if the seller, if you have multiple offers on the table, I keep forgetting we're doing this from the seller perspective, not the buyer perspective. So if you have multiple offers on the table and one of them claims to be cash, but has a longer closing date or pushed out closing date that would facilitate switching to financing, but then they couldn't close on time because they didn't have the cash and they couldn't close with financing within that time period, you could potentially go back to considering one of those previous offers that was on the table whenever you originally took this one, and take their earnest money deposit potentially if they failed to meet everything per the contract that they stated they could do. There are some little nuances in the contract that would allow, would kind of push you to have to extend by a couple of days, depending on the situation. If they could close, if all the financing was taken care of within a couple of days. So that, and plus, it's just like kind of a nice thing to do. If it's only going to extend you by 2 or 3 days, then is it really worth like spending the entire mortgage of another month or whatever getting another one on the table? But there are like some risks and nuances to that. I just wanted to point out.
Just make sure you're discussing this with your agent as you're going forward.
Yeah, absolutely. And that kind of pushes us into closing date. That could be a pretty big deal breaker or maker, essentially, depending on what you're looking for. You know, are you wanting to sell your property very, very quickly because you're looking to purchase somewhere else? Do you already have another property under contract and you need to close this quickly so that you can use those funds to purchase something else? Or do you need to stay in this property for a little while after closing, but you need to close on it, so what you need is a post-closing occupancy agreement? So those are some things to really consider when you're looking at these different offers. Which one has flexibility in the closing date?
Yeah, and discussing all of this with your agent and making sure that they're relaying this to the other agents coming on board will help make sure that the people that are offering on the property can do exactly what you need them to do. Because a great offer is great, don't get me wrong, but if it doesn't match the terms, and in this case closing date, then what does it matter? If you've got to spend $6,000 on a hotel or something, move your family out earlier, cause a bunch of extra stress, it might not be worth it depending on the dollar amount, right?
Yeah.
If there's a pretty big spread, it might be worth it.
Yeah, definitely. Also consider the lender. If you're receiving multiple offers, then it's important to really dig into the details of everything, or rather have your agent dig into the details, right? Because that's our job. So one of the things that you should really be considering is, where is the lender? Are they familiar with our area? Because, a lender out in another state who's also certified in Florida isn't going to have the same knowledge as a lender that's sitting right here with us, right? They're going to be like, oh yeah, I can do this, it's Florida, I'm certified, but they don't know about the different nuances of what goes on here in Florida. We've got hurricanes and such. We've got, flood zones, things that are going to potentially increase a debt to income ratio that they might not take into consideration when they're pre-approving a buyer. And then that becomes an issue in the end. The buyer can't close.
Now, your lender matters a whole bunch. Like I could go on a tangent on that. You guys have probably seen videos on that before. But just put it into perspective too, to add on top of everything. If you've got 2 offers that are the exact same in every capacity, one of them's local, one of them's one of these bigger banks that spends a tremendous amount on advertising for a reason, because it's your money, and that comes across your desk as a seller, which one are you going to take? Well, you might not know, so you're probably going to do what most people do, and what I find most people do is they ask their agent, right? Hey, which one of these is better? Well, they're both netting you the exact same. They both seem like nice people. They're both very well qualified. This one's a local lender, this one is not. That's really the big difference. Okay, Mr. and Mrs. Agent, what are your thoughts on that? Well, typically in my experience, a larger lender will have trouble getting to the closing table on time, and if it doesn't get on time, technically the seller can take your earnest money deposit and walk if it doesn't follow under guidelines underneath the contract, right? We're not attorneys, but it's pretty black and white, right? So if your lender lender can't do that, and they have a history of falling behind, which we have seen time and time again, particularly for the VA borrowers in the house that are using one of these VA-friendly folks. As much as I love them, I'm prior military, I use them too, it's not the best for you. And so if it's between those two and they ask your agent says, well, in the past I've had a really hard time with people that are not local. That's all it's going to take, and your offer's not taken. You could have done everything in the world right, and just because of that, it wouldn't be taken. And it may not seem right, like from the viewpoint of the buyer, but if they're asking our opinion, we've got to give them our opinion, you know, and that could be the deal breaker for you.
Yeah, absolutely. Because like we said initially, this is for the seller perspective, but great insight for the buyer. I feel like this is also a good point to talk about personalities. You know, we're talking about local versus out-of-state lenders. This might also be a good time to talk about different agents that you might potentially be working with on the buy side. I'll let you go into this.
Yeah, actually, it's one of my favorite topics right now. If you guys have been watching the channel recently, I think your relationships matter. I think there is a really, really big difference between the new guy that hasn't done any deals and the experienced guy that gets deals done and doesn't cause a lot of havoc. And this is not a shot on new agents. I love new agents. We train them all the time. I've got a whole list of people that I spend time with. Like, I love new agents, and I actually think they're really good for a lot of people. Like, I'm not knocking this. Like, having somebody on your side that has that extra time, that has that hunger, has that drive, and the time to do all of it, because the more experienced agents have the hunger and the drive and everything else, but they're also handling 20 people at once, right? Or 10 people, or what have you. But I will say, from an offer standpoint, if that's all we're getting at, the notoriety of your agent may come in play. Maybe it's not the notoriety, that's not the right word, but your reputation. Are you the person that gets deals done? And is it a headache, right? Because we go back just to what I was saying a second ago with the lender. If you ask me as a seller or agent, anybody on our team, you say, these two offers are the exact same, which one do I choose? And I go, well, this is a young, hungry agent right here. They need the money, right? So they're going to want it to go through. But I've never worked with them. Now, I worked with so-and-so, and me and so-and-so work very well together. She's got an admin staff, I've got an admin staff. Things go flawlessly. We very rarely get pushed back. We very rarely have any issues, and if an issue comes up, she has the experience to talk to the person. Now, obviously, that's not the full scope of the conversation. We wouldn't go that deep into it, but that's the kind of conversation that's going to happen. I worked with so-and-so, and I haven't worked with this one. This person is awesome. That same thing is going to be flipped around on you if you're the agent, you know, or you have the agent on the other side that's a pain in the butt. We all have them. It just is what it is. And, you know, they're trying to do best by their client. We're not knocking them here, but that's going to come into play. Hey, this agent's really nice, and make sure that the deal gets done. This one's going to make my life painful. And if your seller likes you, they don't want to make your life painful. But of course, that's things all being equal.
Yeah, definitely. And I would say, you know, in the event that we don't know the agents with the top offers, something to be looked at would be, how have they been so far in the process? You know, are they calling every 5 minutes, every 2 hours, asking for updates? Did they do kind of a note section in the offer stating these are the bullet points of the contract, so that you know they're kind of detail oriented, they've already looked through everything, and things are just going to be kind of smooth. So definitely something to consider when you are looking at these different offers. Like, what kind of stress level are you going to be at depending on who you're looking at as far as an agent.
Now, for the buyers that are watching, maybe you don't know where your agent stands with reputation, things like that. That's fine. Just ask them to ask certain questions, right? So this goes back into, what are we going to offer? How are we going to make this the best for the seller? Well, you need to ask questions. What closing date do they want? Do they need a lease back? Do they, want any specific thing? Is there anything that's important to them at all? Like, okay, yeah, they want to keep the washer and dryer. Good. We're omitting the washer and dryer, right? Like, that could be the difference. It could be a $2,000 difference in price, but they might just be attached to that product, right? So there's about a dozen, 2 dozen, maybe 3 dozen things like that you could do, but just make sure that your person is asking those questions, because from the seller's standpoint, when somebody calls me and they're saying, hey, I've got a pre-approved buyer, they're pre-approved much higher than this, they're good to go, they give me all the details, they're like, all of this, and they want to know what's important to you and your seller, I instantly go, okay, cool. Like, this might be a tactic, but it's also helping my people out. So good. Here's all the information. Now, a good agent, I'm going to be relaying that anyway, but not every agent's going to do it out of default, especially newer agents in the marketplace that haven't been doing this for a long time. They see 50 offers come in and they're just like, oh, well, this is easy. We don't need to give this great feedback and all this other stuff. And, but that stuff does matter.
Yeah, absolutely. All right, let's get into actual contract details. So typically we're going to see two kinds of contracts. You're going to see an as-is contract or a contract with repair limits. So the as-is is kind of what it sounds like. Right up front, the buyers aren't asking for any repairs. That sounds great. But they have an inspection period and they can walk away for any reason whatsoever during that inspection period. However, if they have repair limits there, they don't have that ability to just walk away and still keep their earnest money deposit. They are stating up front they're probably going to ask for some repairs. Maybe they saw something at the property that made them think, this is probably going to need to get repaired. So they're already in that mindset of, we're going to expect some things to get repaired. You are protected in the contract by, there's a blurb in there about what's warranted. So they won't ask for anything cosmetic, or they won't be able to ask for anything cosmetic to be fixed, but if there's something that's not operating the way that it's supposed to or intended to, that could end up being something that you're going to need to replace. So that, right off the bat, whenever we're presenting these offers to you, we're going to use that into the calculation of what you're potentially going to have to pay out per the contract and what that net is going to look like for you.
And that's one of the really big important things of, hey, baseline number is one thing, but what does it look like once we go into it? Because a $400,000 offer and a $410,000 offer, if the $410,000 has $20,000, which is ludicrous, nobody's going to be that high for the most part, but let's pretend if it's $20,000, well now, even though it looked like a better offer, it's actually worse. So we want to take all this stuff into consideration.
Yeah, absolutely. And to detail what he said a little bit more, he's saying for if the $400,000 is an as is and the $410 is asking for $20,000 in repairs. That's
right.
Yeah, definitely.
Yeah, thanks for the clarification.
Yeah. So we talked about repair limits, and on my notes, escalation clauses, actually, because this comes in big. And actually, I'm going to throw a surprise question in here for you because I'm not sure about it. So escalation clauses are something that we see quite a bit in this market, and it's kind of I don't want to throw any kind of connotations on it, but some people like them and some people don't. An escalation clause essentially is going to say it's going to be like a safe way to go as high as you're able to, but no higher than you need to on an offer. So we'll have it in front of us, and it will essentially say something like, our offer is $400,000. The list price was $400,000, so we're going to offer $400,000 with an escalation clause that will make our offer $2,000 more than any other offer, up to $415,000. So if you were to get an offer for $412,000, this escalation clause would go into play. So then their offer would now be $414,000, right? So now the $414,000 is now beating out that $412,000. But surprise question, and I haven't had this happen before, but someone else mentioned it in a group, and I haven't had this happen. So say you get two offers in, and one's at $405,000 with an escalation clause up to $410,000, and then you have another offer and it's at $407,000 with an escalation clause up to $410,000. Are both of those now actually at $410,000 offers? Because does the one escalation clause kick up the other or not?
No, it does. Yeah, because you're going above the next one. So you'd be 407, then that person would be 409. Now this person would be 410. So it would just max out and go to the whatever the highest one is. So the same thing in another situation. Let's say 402 escalated up to 410, and somebody else did 407 escalated to 415. Well, in that case, it would obviously be the 415 winner, but he'd be winning it at 410 plus whatever their overage is that they're electing to pay.
Okay, that's a good one, because I saw a fight about this in a Facebook group recently, and I agreed with you. I
think this is one of those things where when it starts going into that's where you need to start getting attorneys involved, things like that, because we can make our interpretation all we want, but we do not hold a Florida bar license. We've not taken the Florida bar or anything like that, at least not that I'm aware of. So
no, I've not. It's not on my list of things to do. Okay, so that was some pretty solid information. I really liked going over that, even for my own knowledge. But the next thing I want to go over is the appraisal gap contingency. Or actually, I'll let you go ahead and
probably one of the bigger things that we're seeing right now, like it kind of, when COVID happened and the prices started going a little bit bananas, it started out with escalation clause. We've actually been doing them since like 2018 when we needed to, and a lot of times it was so rare in our market that people were calling us. They were like, what is it? I don't understand. We had to like run math with them, we actually had a video that I would send out every time we did an escalation clause because people didn't understand it. But now it became super popular. When that stopped working, then it was appraisal gaps. months, and then we'll get into some of the other stuff that it's doing too. Yeah, so appraisal gaps are one of the most common things that we're seeing right now, and just like a lot of things, it just gains popularity over time. But basically what you're choosing to do is, let's use the same situation we had before. $400,000, we put an escalation clause up to $415 with a $5,000 appraisal gap. They took our offer, let's say that our agreed upon price is $412,000 because the next best offer was $410. Using the same example, just kind of paint the picture, right? And okay, so now we're under an agreement price of $412,000 with a $5,000 appraisal gap. The appraisal comes in about 2 weeks later, and it only appraised for $405,000. Darn, that's not a good thing, right? Well, luckily we have a $5,000 appraisal gap, so the seller is going to have to come down $2,000 if they want to proceed. Keep that in mind. They do have to elect to do that still. And you would be paying $5,000 out of pocket. This is above your closing costs and above everything else, your down payment, anything else you've got to put down that you're going to pay for it. Now, these are not my favorite. I'm just going to baseline say it, but they're not my favorite in the execution of them because I don't like paying for more than a property is worth. But properties tend to get worth a little bit under where they're at because appraisers only look at solds. They don't look at where the market's going. But they are very effective. So from that standpoint of making our clients win from the buyer side, then that's a thing. But from the seller side, it's definitely good to have this appraisal gap in here because who wants to buy a property that's under appraised, or doesn't valuate, right? It doesn't have value. In a lot of markets, it's happening, but it's just not happening here yet on a big level.
Yeah, exactly. And that's something that we have to take into consideration whenever we're compiling all this different data of all these different offers is, okay, yeah, well, we listed it at 400,000 and we had all these offers above 400,000, but we know what we anticipated to appraise for. So what we're probably looking for is, which one's going to net the seller more, but which one is also ready to pay more. If you're going to offer 410,000, then you're saying you think it's worth 410,000, so show me the money kind of thing. It's not saying, I think it's worth 410,000 if the bank does. It says, I think it's worth 410,000. Okay, so let's put that appraisal gap contingency in there then. So that's definitely been something that I've seen quite a bit in our market, and I've had a lot of buyers actually win with that. Not even going, a huge amount, but just the littlest bit to show, we really think this property is worth it. We like this property because, we like to know that people like our properties, right? So it's like, hey, I have a lot of, love for this thing, I've either had it as a rental or whatever, and I want to know someone else values it too. Let's talk about contingencies or like risks to the contract.
Yeah, so I guess as a seller, you want as much of the buyer protecting contingencies to be removed as possible. Now, this isn't we're trying to be butt heads or anything like that. This is simply trying to get the best for you. So things that might protect the buyer a little bit or give them outs, that's what we kind of want to remove. So your inspection timeline, we talked about inspections a little bit earlier. You're going to have a timeline for that on how quickly you can get that done. The contract might default at, let's say, 15 days for right now, and it does kind of change depending on which contract we use, but let's say it's 15 days. Well, cutting that down to 7 is a lot better because that's giving you 15 days, or giving the buyer 15 days to take this off market. And if you've got a short window, you need to sell in the next 45 days, then you don't have time for that. You don't want them to go to the 14th day and say, you know what? We don't want it.
Yeah.
Yeah, we're going to go and back out. Sorry about that. Sorry about your lost momentum. Sorry about your lost traction. Sorry about all of that, but we're not even going to compensate you for it. We're just going to take our earnest money deposit and walk. That's what we're trying to protect you guys from as sellers.
Yeah, absolutely. And something else that we look at are, kind of down at the bottom of the contract, you're going to see some different options there for buyer protections, like sale of property. A lot of buyers will be, moving from one house to another, and so they might have to sell their current property in order to qualify or have the funds to purchase yours. So if we see that, we're definitely going to be asking that buyer, as long as this is the offer that's going to net you the most money, of course, and be the lowest heartache, we're going to be asking that buyer's agent, hey, is it already on the market? Does it already have an offer? Has it already appraised? Has it already hit all those hiccups that could potentially come up, so that we know they're pretty solid that one, it's going to sell, and two, it's going to sell for what they anticipate it selling for, so that they actually are going to get the money that they're expecting expecting to use to put down on your property. That's kind of a big one.
Yeah, so going back to having two offers in your hand that are very similar, in this case, I guess it wouldn't be similar. Let's use the example of we've got somebody that needs to sell their home in Kansas, and they seem pretty solid, and they're offering $410, but this guy's offering $405 without that contingency. Is that $5,000 worth it to you? If this guy falls through because his buyer falls through, which could happen for a number of different reasons, just like it could fall through for you, now you have two people that you need. Is that $5,000 or whatever that spread is that going to be worth it for your hassle if you have to throw it back on the market with your lost momentum? Because momentum really makes a big difference in this marketplace.
Yes, definitely. So that was kind of something that we don't see every time, but we do see it often enough to bring it up. And if you have a situation that you've encountered before at a previous sale, go ahead and comment down below and let us know what kind of weird circumstance that you had so that we can tell everybody about it. We like to inform everyone of just little things that could pop up that maybe we didn't think about, that we haven't seen before, because this process is always evolving and it's going to continue to do so. So sometimes we see history repeat itself, or sometimes we just get really surprised.
That it's just something new. Yeah, we actually learn a lot from our folks out in California because they tend to be a little bit ahead of us in a lot of their dealings and stuff. So we start seeing trends out there before we come out here. So yeah, please put it down below. We would love to hear what sort of weird stories you have.
Oh yeah, or if we have any other agents that are watching our videos, if you've had something crazy happen, definitely share it with us below. We love to share stories.
But before we go, bonus contents.
Something else that we don't see on the contract, but something that we like to ask the buyer's agent, because a lot of folks are moving here from out of town or out of country, so they haven't actually seen the property in person.
A lot of sight unseen right now. Yep.
Yes, and that's great. And for a lot of cases, that's just how it has to be. And that's why a lot of my listings, I'll try to do a video in it to actually help out of state or out of town or out of country buyers to see it as much as possible to the best of their ability prior to getting here or making a decision. But if we have two offers that are exactly alike,
right back to that same thing.
And
one of them's seen the property, one of them has not.
Yeah, that would be something to consider, because that person that is not, especially if they're going to come and see the property prior to moving in, if they're going to do that final walkthrough, or they're going to come and look at it during that inspection period, if it's an as-is, well, there's a risk that we have on one that we don't have on the other.
Yeah, so definitely keep that in mind. I hope some of these tips were helpful to you guys. And that's everything we have for comparing multiple offers from the sales side. If you guys have any questions, please let us know down below. We love to chat with you guys every single day, or every other day. Whenever we get a comment, we like chatting with you. So I guess we will talk at you later. See ya.
A few moments later.
Break it down. Boom, do 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 do. All right.